This is Rod Kusanen, Spooman for Risk on November 23rd, 2009. All times are Central Standard Time. Today's video will focus your attention on things we have not spoken about in the past on any video at any previous time. So we recommend that if you are not already prepared to take notes, today would be a good time to start. You have in front of you a 1-minute ES tick chart with the 3 premium feeds that we read every day: the ES, the S&P, and the NASDAQ premium. Our traders today knew in advance that they would most likely profit by taking a short trade. How did they know that? Number one, they knew how to read the premium, and number two, they knew what the bias was for program trading institutions on this date. How did they know that? Here's the key. We've never said this before, and we will not likely say it again anytime soon. We're feeling especially generous. If you will go to our website, RSKsys.com, and go to the bottom of the home page, you will find a link to program trading. In it, you will find 3 important numbers. Number 1, fair value. Number 2, program buying levels. And number 3, program selling levels. What's all that about? Program trading makes up over 60% of market volume every single day. And if you don't know what program trading institutions are going to be doing that day, and you're trading in the opposite directions they are, you will get killed. So here's the rule. Whatever program trading level is closest to fair value, that establishes what the bias is on that day. Today, the bias was towards program selling, and we knew that before the open. We know what the bias will be tomorrow, and we know it right now. And right now is 4 p.m. Mountain Standard Time. So we knew that the most likely profitable trades would be short today, and we knew exactly when to take them. We knew that because of how to read the premium. If you don't know how to read the premium, go to our website, RSKsys.com. Read the rules on the premium. Those rules are precise, and they work. When the Spoos hit a new high at 9:01 today, all 3 premium feeds hit a new low simultaneously. That told us, without any other indicator, to instantly, right now, short the market. If for whatever reason you failed to do so, you had another opportunity based upon the premium and no other indicator. 9/11, new low on the premium, short the market. Now, where did our strategy short the market? This strategy shorted the market shortly after 9:07 this morning. There are no other short trades on this chart at any time, anywhere. That's the only short trade. Now, what went into the short trade? How was that calculated? That goes beyond the scope of this video, but for the most part, group reversals is the backbone of our system. And group reversals using chart number 5, which runs an array of MACD calculations off of 6 different tick bar intervals running from 70,000 to 120,000 tick bars. We use a unique method of calculating and updating the MACD calculation in our group reversal system. If you don't know what group reversals are, go to our website, RSKsys.com, and read the section on group reversals. This chart used a combination of group reversals on the ES with MACD calculations on a 20 tick bar tick data feed, TICK. using that simple combination, it showed us this singular trade for the day, short. Now, what you also have on this chart is quite interesting, especially for those of you that know anything about programming or about how TradeStation restricts your ability in their charts. This is a 100 ES tick bar chart. You cannot have any other tick interval or any other tick data other than what's plotted here. You can't do that with TradeStation, but we know how to plot non-related tick data and tick indicators on these charts. So you will see us four stochastics here. An ES stochastic on a 500 tick bar, a stochastic on the tick using a 200 tick calculation, an ADS-PD, as well as a VIX. These four stochastics are being plotted even though the data feed does not originate on this chart. It's not here. The only symbol on this chart is the ES itself. But we know how to do this. And there are very few programmers that know how. Now that can just give us visual confirmation of what we're doing and where the calculated trades take place. Now the last piece of information we're going to talk about had to do with when would be the best exit for this trade. Our traders knew that the best exit for this trade would likely be prior to the last 30 minutes of the trading day. How in the world did they know that? They knew it because we teach our traders the pattern of the day. In the member section of our website, there is a section on the rules for reading the pattern of the day. There are only 4 different patterns to any particular day. Now, we've actually come up with 5, but that doesn't happen every day, so it's sort of an extraneous pattern. But the fact is, today was a green day. The rules for reading a green day down are shown on our website. And when the best entry of the day occurs after the first half hour, the best exit of the day will be prior to the last half hour. So where did our strategies tell us to exit this market? The best exit would be, generally speaking, prior to the last half hour of the day. Here's 1435, the low of the day. Our strategies didn't kick in the exit until 1446. We had other trades prior to 1446, one that occurred shortly after 1 o'clock. Does that fit the pattern of the day? No. And we had two other long trades in the morning. Does that fit the pattern of the day? No. When you combine the pattern of the day with a calculated strategic exit, you have a winning combination. And here's where the trade occurs. That's your best exit, based on a calculation consistent with the pattern of the day. So in this video, we revealed 2 important features of our trading course that our traders know about and few traders in the world know anything about. That is the program trading bias for the day and the pattern of the day. That information we teach. We'll teach it to you too if you come to Risk International, RSKsys.com. Take our trading course. It will pay for itself. This is Rod Kusin and Spooman for Risk.